this episode of Newt's World, the American people spoke out on Tuesday, November 5th, when they voted overwhelmingly for President-elect Donald J. Trump. And the number one issue on voters' minds was the economy. Many said they were tired of high prices at the grocery store, the gas station, and housing costs. The record inflation we've experienced in the last few years has taken its toll on the American family. Now that President Trump will be returning to the White House, how can we expect the economy to change? Here to discuss the state of our economy, I'm really pleased to welcome back my guest, Thomas Hoenig. He is the former Vice Chairman of the Federal Deposit Insurance Corporation, former President and CEO of the Federal Reserve Bank of Kansas City. He was with the Federal Reserve for 38 years. He is currently a distinguished senior fellow at the Mercatus Center at George Mason University. Tom, welcome back, and thank you for joining me again on Newt's World.
Well, thank you for having me. I look forward to the conversation. Thank you very much.
You know so much about this. I'm really excited. In your perspective, how has the economy impacted the 2024 election, and how does that compare to its influence in previous election years?
Well, I certainly think the economy has a lot to do with this election, as it has in past elections as well. I think in this election, it's really a reflection of several years where the middle class of the United States has fallen further behind in their ability to accumulate wealth. We saw it following the great financial crisis when asset values, through very stimulative policy, monetary-wise, asset values increased like 500% between then and now, whereas wages have increased literally maybe 60%. And in the last 3 years, the real wages have fallen behind even more as prices have increased, general prices have increased 20%, and Americans' middle class income has barely kept pace and actually has fallen behind in terms of its wage increases versus inflation. People resent that. They react to that, as you would expect. And I think it's really an accumulation of years of falling behind that you saw reflected in this vote, number one. Number two, economics is always important to election outcomes. We saw it with past presidents, whether it was H.W. Bush and the slowdown that happened as he was trying to run for president, as you saw it in the Republicans in an earlier period or the Democrats in an earlier period. So economy drives, importantly, the outcome of elections, yes.
Why are we not able to change our policies to enable workers to be winning as much as the very wealthy?
I think part of it is there's this desire on the part of government to solve all problems. And you see that reflected really in the fiscal policies and the monetary policies that we have been following for the last 3 decades or more. Look at the size of our government that has grown and the amount of spending that has gone on. Look at the size of our debt that has to be funded and take from the private sector in one way or another. And look at monetary policy, well-intentioned. I don't question the intentions, but think about it. Quantitative easing that increased the Fed's balance sheet from less than $1 trillion to $9 trillion over that period. That expansion has to go somewhere. And it goes into the financial sector first. And they use it to do buyouts or to do different types of financial transactions. That increases asset values, increases price of homes as people borrow and as money is available. As they push interest rates down, the asset values go way up. People who are earning a wage don't get those same increases. They don't get part of that. They've been, in a sense, marginalized, partly because we have very low import costs that came in during the 90s and 2000s that kept prices down, but also made it more difficult for labor to increase their wage level. So you have this major move towards financing everything, monetizing it through the Federal Reserve's actions, and that hasn't fallen through to productivity gains, which were very modest in the 2010 period to 2020, till 2018 at least, and has been more modest again prior to the COVID and only now picking up. So there's reasons for it that relate to what I'd say well-intentioned bad policy relative to the federal government's interest in trying to help everyone, increasing our debt, and the Fed's policies of printing money to accommodate their ability to do that, which has raised inflation, both asset inflation and price inflation, and has caused the middle class to fall behind.
So part of the purpose here was to have a balanced system, but it seems to me that the Fed has consistently been more afraid of unemployment than of inflation, and it's inherently inflationary.
I think that's right. In one sense, well-intentioned, because in 2010, when they started, even though the economy was in recovery, it started recovering in the third quarter of 2009, the unemployment level in 2010 was still well above 9%. And the thought was, well, we'll put more stimulus in there. There was an effort to try and do fiscal, but that only got so far. But the Fed was able to continue to increase its balance sheet, to print more money, to buy more government and government-guaranteed securities. That caused asset price to increase. And even labor, in that sense, thought, well, low interest rates are better than higher interest rates, and therefore we'll accept that. But the fact is, pushing those interest rates down, pushing that money out, caused inflation to occur in assets first. And then when we did it again in 2020 through 2021, that even made both the fiscal and monetary policy stimulus far greater than what we could produce, and therefore inflation became almost untenable as we hit 2022. So the middle class pays in big ways for that. Asset holders win because asset inflation increases your holding of wealth.
So what you have is a Federal Reserve which has been more willing to protect the big banks and to protect the major investors at the cost of individuals who find themselves increasingly caught in an income and price squeeze.
Yes. First of all, rationalized by two parts. One is this will help unemployment. Number two, we have to have financial stability at all costs. And so rather than say we're going to have a recession and we're going to have banks fail, and I understand that, we're going to bail them out. We're going to put more money in trying to preclude a recession, preclude bank problems. And it's perhaps a bad analogy, but it's like a forest. If you don't clean the brush out as it accumulates, then when you finally do have a fire, it's a major fire. And then you end up trying to do even more than you did before. And we increase our debt again, and we increase inflation again. And that's the risk I think we run going forward from here if we run into any difficulties again.
People talk about the scale of the deficit overhang and the national debt overhang now, which I think, if I saw recently, the interest on the national debt's now bigger than the cost of national security.
Yes. But the interest on the debt is bigger than our defense spending.
So from your perspective, at what point does that become an unsustainable burden?
Well, I think there's two ways that people try and look at that. One is, does it mean we're going to have a crisis? Well, maybe, but maybe not. But one thing is for sure, that when you do that and you have to bring more money into the government, that is, it has to come from the private sector, either interest rates go up then, or you require the Fed to print more money to buy that debt, that government debt and that spending. But what that does is it actually causes more asset inflation, and that reduces productivity in the economy over time. And in fact, the Congressional Budget Office is acknowledging that if we continue on the path we are right now, that the debt will be more than $50 trillion at the end of the decade. But here's the kicker, Mr. Speaker. The productivity of the economy, which is averaging, now right now it's higher, but averaging 2.2%, will average around 1.8% at the end of a decade or over the course of the decade. What that means is, in terms of real GDP output, real wealth creation, that will reduce what could have been by over $1 trillion. $1 trillion less real growth in the economy over that period, at least. And those are fairly favorable projections relative to growth, so it probably will even be worse than that. So it's not sustainable now, in one sense. We cannot continue this and move our productivity up indefinitely into the future. It's going to take a hit, and that means the middle class is going to be less well off at the end of a decade if we continue down this road.
with the rise of artificial intelligence, with the extraordinary collapse in cost at SpaceX, which now launches satellites for about 10% of how they were launched before they came along. Shouldn't we be almost on the edge of a golden age of productivity increases based on scientific and technological breakthroughs?
Yes, we should be. And what does it take to do that? It takes capital to do that. It takes funding for new ventures, new expansions in technology and so forth. And that requires private capital. So if the government is pulling more capital out of the economy, or the Fed has to print more money to do that, that means that your ability to, say, harvest that productivity will be undermined. And that's where I think we need to be careful going forward. I don't mean to say we have to have a recession to do that, but we do have to slow the growth in our debt from the public sector, because you have to fund that debt from some source. If you fund it from the private sector, who the savers are, that takes it away from private investors. If you fund that from the Federal Reserve and you have them print the money, that causes inflation and still reduces our productivity over time. So we have choices to make here, and it is to rebalance our spending and printing of money in terms of what our economy can produce without causing inflation and without shorting the private sector, who needs to be funded if we're going to harvest the technology and the productivity gains that are ours to be made on a global scale.
For years, I've read about the crowding out effect of government debt. It seems to me there's a lot of capital awash in this country right now.
There's a lot of money awash in this country right now, and that's what's causing the inflation. There's an enormous amount of liquidity, and it's being used to buy stocks, it's being used to buy housing, but what it does, it creates excess demand because it's new printed money, and not due to increased productivity, but increased to do money, liquidity out there that has to go somewhere, and that's what causes you the asset and price inflations over time and undermines your ability to grow. If you really want real growth, it does have to come from increased savings. People giving up consumption now for something in the future, not having money printed so I can buy it now, and it's a wash, and you see it everywhere. Excess liquidity causing the stock market to go up. You know, it feels really good if you own those assets, if you own a house and you know you can sell it for twice or three times what you paid for. But what about new entrants? What about new venture capital? What about new opportunities? That has to come from real savings that you can convert into real productivity gains. And real productivity gains are what serve the best interests of wage earners and capitalists both.
I mean, that's a very tricky balance.
Yes, it's a tricky balance. It is. It always has been. That's why you have the Fed supposedly independent, so that they don't cause inflation. They don't contribute to the misallocation of credit. And it used to be when the government had to pull from the private sector, it became obvious sooner. That's why you had the bond vigilantes and you had people who caused interest rates to come up, and that was a discipline on the government. But when you print money to accommodate that, that discipline seems to go away temporarily until the inflation comes back and takes all that gain away from the middle class.
When you look at it that way, you have a situation where you at least have Trump sort of suggesting that he might replace the current head of the Federal Reserve. And I'm not sure legally he can, but does it worry you to have too much political impact on the Fed? Or in fact, given their recent track record, is it kind of good to have people paying attention to them?
I think that there's always been people looking at the Fed. I mean, the issue of independence is really how much you can stand up to that pressure. Our history is full of presidents calling the chairman of the Fed saying, we need this, we need that. And I think it takes both leadership, political leadership, because really the control of money is really delegated to the Congress, who has then put the Fed in a position to carry that out in an independent way so that they don't print too much money or the Congress doesn't spend too much money. So I think it's always been there. It will always be there. It's up to the Fed to say no. And then I think, yeah, you're right. I don't think legally you can remove them. I think if the Fed does a good job, the pressure to do so will not be as great. But if we have inflation or, and presidents also like low interest rates, especially if they see their economy slowing. And that's when you see the greatest pressure put on the Federal Reserve. Lower interest rates. We don't want our economy stalling. Keep going. You can't do this to us. It's all the Fed's fault. That's when the real issue of independence comes up almost always.
It strikes me that the Trump campaign and the 2024 Republican Party platform really has a significant commitment on tax cuts and regulatory reform. I'm curious, how do you read the Trump economic plan? One, do you think it would work? And two, do you think he can get it through Congress?
That's a hard question to answer, but I think number one, he certainly should try. Number two, I think, though, he has a challenge. I think for this administration, it's harder than it was even for when you were the Speaker of the House, because the debt is so much greater and the debt carry is so much greater than it was when you were in the House. So, yes, spending cuts, very important part of it. Extremely important, number one. Number two, though, he's promised not to touch Social Security and Medicare, which are the two major spendings that are indexed to inflation. And I think you're going to have a very difficult time bringing the deficit back into balance without a broader sweep than just we're going to cut the bureaucracy down, which I think they should do, number one. Number two, I think deregulation is extremely important to improving productivity. You hamstring businesses, smaller banks, regional banks are hamstrung. They need to be, I think, freed up more. Other industries are hamstrung. They need to be freed up more. That's where you get productivity. As you know better than I do, when you were able, you and the then administration were able to bring the debt down and actually bring surplus forward, our productivity was very high. The growth rate, real growth rate, as you said, was 4% in at least 3 of those 4 years, and success came from it. So they have to get the spending down and get the debt more in balance. And I think if they do that, then people will feel confident that the debt is going to be under control. And therefore you can invest and you can get a real return. And labor can, besides strike, can get real wage increases without disrupting the economy. And then you get real productivity increases and real growth that I think is around the 4% target that you were just mentioning.
When you look at all that, how much do you think Trump's talking about and commitment to tariffs plays into all this?
It has a role, certainly. Number one, it will affect companies domestically because tariffs will affect those who produce and who import to produce. Now, it will also affect tax revenues to some extent, but we don't know how much. I think there the question is how deep and how broad are the tariffs going to be? I understand tariffs to protect national security. I think there's legitimate arguments there. But I think tariffs in and of themselves, I don't know if it'll make sense, but, free trade in the United States has been with us since the Constitution. You have these 50 states, and you have free trade among them. And you have laws of enforcement that protects it and gives you confidence that it's protected. Free trade internationally can be very, very productive, but it also has to be under laws, under rules that are adhered to and can be enforced. And I think one of the issues that made people resent the open trade in our country over the last 15 years or so is that some countries cheat. And when you have that, what you do is you try and disrupt trade altogether. You put tariffs on, you got to stop it. And I think therein lies the hard part of it. Do you really want to stop all trade, or do you want to stop the cheating? Because the United States can outproduce anyone if you give us the rules and we play by the rules and we expect others to play by the rules. But I think that's the hard part, having the laws and rules in place to protect trade, not just promote trade for some and interfere with it for others.
Maybe it's because I'm a skeptical conservative, but even if you have the rules in place, there is a potential for countries who feel that they're going to lose under the rules to just break loose and do whatever they want to.
You don't have an international constitution like you do in the United States. That's why trade internationally is so much controversial, because you can't control the cheating part of it that I think makes a difference, and you have national security interests in the way as well. It's a very fine line to walk, although I think in some ways trade is beneficial, but it has to be under clear rules, enforced, and you have to have your national security in mind.
In my own career, of 20 years serving in Congress, I gradually came to the conclusion that you can chant free trade all you want to, but if you're dealing with the Chinese, it's not going to be free trade. It will be a negotiated arrangement. Otherwise, they'll just simply run over you.
And that's what we've seen happen. And that's where the resentment is. We've had other trade issues, but at least there, the enforcement is more above board. But we've had a much more difficult time with the Chinese, no question about it.
Trump had a clear-cut record. I mean, other than Grover Cleveland, we've never been in a situation to have a president where you could look at their record, come back 4 years later and decide whether you want to hire him again. When you look at what he did actually accomplish, and then you look at the plans he's talked about during the campaign, what's your level of confidence that he can actually initiate a substantial American economic growth?
I think it's pretty high. I mean, I think he's going to push improvements in productivity. I think he's going to press deregulation. That's going to increase productivity. I'm very confident of that, number one. I think his big challenge, frankly, is what he's going to do with the mandatory spending issues. Medicare is a big part of the spending. Social Security is a big part of it. Social Security is going to be falling farther and farther behind. How are we going to deal with that is a very important question in solving our debt problem going forward. Productivity, yes, deregulation will help that. If they can get a hold of the other part of it, and that is get the deficit to stop growing, and our economy's growing faster than our debt accumulation, then we'll see productivity gains and we'll see real output. That's his challenge, though. It's a huge challenge.
I think this topic, and I really appreciate your coming and taking the time to talk with us, this is the heart of whether or not Trump can really put together a long-term American coalition. If he can deliver so that people feel that they have better lives with more resources, with prices, not skyrocketing, I think they're likely to reward Trump and his allies for many, many years. If they can't get that done, we'll be right back in the soup of having very contentious elections, it seems to me.
That goes back to your first question. Economics drives so much. And so the challenge is, how do we bring the middle class along, give them real improvement in their standard of living, as was done? I mean, those 4 years that you were involved with where we balanced the budget, those were very productive years, very strong real growth years. People were satisfied with that. When we want to do more than that, when you can't afford it, when it doesn't work, and you put more in the federal government's purview, then you undermine that growth. And when I say to you, our average growth rate now is 2%, that's half of what it was. That's not good. That's not good. And so it'll define the future.
It's the compound interest effect that makes it so important to keep growing, to keep moving in the right direction. On the other hand, I guess I really am an optimist. I look at what Elon Musk has done with the development of reusable rockets. They just delivered a satellite to a moon of Jupiter for about 10% of what Boeing would have charged. And I think that with artificial intelligence and with breakthroughs in medical care, 2 decades from now, we could be in a golden age of extraordinary possibilities.
One thing the United States, America is good at is innovation and progress, if they're allowed to do that. If we don't overregulate them and we don't overinflate. I mean, we don't try and do more than what our economies, but there's so much we can do. That's what we ought to learn from, is how much we can do when we exercise some self-discipline in terms of our spending, in terms of what we reach for. We can grab the stars, but we have to do it in a way that captures the productivity that our economy can produce and has produced over its almost quarter millennium. So I'm very optimistic as well, but I don't want to underestimate the challenges that we have to face.
Somebody says that the other day, something I really loved, which is when we celebrate in 2026, the 250th anniversary, we should make it a 2-part celebration. One part looks back at a quarter millennium, but the other part should look forward to the next 250 years and say, what is it we could accomplish? We've already seen what we've done. Here's how far we've come. Imagine we go at least that far in the next 250 years. And I thought that was a really positive way of framing it.
I think it should, because we have to think to the future. You're right. We have to think another quarter millennium forward, because we, the United States, are the leader of the world, and we are the freest economy. and we are the freest people, and we have those potential. Let's not squander it. Let's grab it and move forward. That needs to be the message.
Well, and first comes vision. I mean, you have to have a vision of what's possible to then go do it. Listen, Tom, I want to thank you. This is a great conversation. As you know, it's extraordinarily important. And I do want to let our listeners know they can find out more about the Mercatus Center at George Mason University and the work you're doing there at mercatus.org. But I really appreciate your taking the time to be with us today.
It was my pleasure to be with you again. Thank you.
Thank you to my guest, Thomas Hoenig. You can learn more about the state of our economy on our show page at newtsworld.com. Newt's World is produced by Gingrich 360 and iHeartMedia. Our executive producer is Garnsey Sloan. Our researcher is Rachel Peterson. The artwork for the show was created by Steve Penley. Special thanks to the team at Gingrich 360. If you've been enjoying Newt's World, I hope you'll go to Apple Podcast and both rate us with 5 stars and give us a review so others can learn what it's all about. Right now, listeners of Newt's World can sign up for my 3 free weekly columns at gingrich360.com/newsletter. I'm Newt Gingrich. This is Newt's World.